Welcome to the presentation on deficit financing, a look at Canada's history over the last 150 years. Narrator for this presentation is John Oakey, National Director for Tax Services with Baker Tilly, Canada. The purpose of this presentation is to take a look at the last 150 years of history with regards to the Canadian federal government and its deficit financing. If we take a look at this first graph, from 1867 to 1912, the first 45 years from Confederation, there's a lot of deficits that were run, and you can see the debt had slowly increased up to about 1900 and then started to decrease. Well, during these years since Confederation, one of the things that the federal government did was assume the provincial debt when the provinces joined to be part of Canada. And the other interesting aspect with regards to deficit financing through these years is the federal government was building infrastructure, and one of the big projects was the National Railroad. And so the deficit financing was used for a very specific purpose during that time period. And if we move to the next 30 years, and we go from 1914 to 1944, there are four major points in history that dramatically affect both deficit financing and the increase or decrease of the national debt. The first one is World War I. As you can see here, the debt started to increase in relation to World War I, and the deficits started to happen. Then we get into the Roaring 20s, where there's good economic output, and the deficits decrease. We come close to breaking even, so the deficits shrink. We get to the point where we're actually running very small break-even or small surplus, and the debt starts to decline. Well, then we work our way into the Great Depression, into the 30s, and the debt starts to increase, and the deficits start happening again. Then we start to approach World War II. And as you can see in World War II, we have a dramatic change here. We have a significant increase in debt to GDP, and we have very large deficits. If we move on to the post-war era, 1945 to 1972, what we see here is we see a gradual decline in the national debt. Interestingly, when we look at the deficit financing, we are still running small deficits or very small surpluses throughout this time period. Now, this time period was the post-war economic boom, where the GDP was increasing significantly. But what was happening is the governments during this time period, as the GDP was increasing and the revenues for the government were increasing, they also increased the spending of the governments during that time. And so they actually end up eating up a lot of this increased revenue with increased expenses throughout that time period. And if we move to the next graph, and we're going from 1973 up to 1995, this is where we start to see a decrease in the economic boom from the post-World War economic boom that happened, post-World War II. And we start seeing a downturn in the economy, and we'll see the deficits start to creep back in again. And this happens all the way from early 1970s, and it happens all the way up until we get into the mid-90s. And as you can see, we're running significant deficits for a long period of time. And during this period, you can see the debt just keeps going up and up and up. And then we get into the mid-90s. And we get into the mid-90s, this is where we hit our financial crisis. And this is where, to the point where most governing parties, and this became a political platform for the election, I think it was in 1993, during that election period, where the main focus was on the fiscal responsibility of the government, because the debt had gotten to the point where the percentage of debt to GDP was too high. And so, as you see in the mid to late 90s and going into the 2000s, there was a big focus on reducing the deficit and bringing the debt down. So as you see, the deficits started going down or started reaching towards surpluses, and then they ran a surplus for a number of years, and we're paying down the debt over that time period. Well, then we hit 2008, 2009, into 2010, and that's when we hit our most current recession. And once again, the deficit creeped in, and you can see the debt moves up just slightly, but not significantly. And one of the reasons is because the deficit financing only lasted for a short period of time, and then we went back into a surplus again. So that's just a quick look at the history of deficit financing from 1867 up to 2017. If we look at these two charts from 1867 and we move to 2000, in 1867, most of the money that was spent by the federal government was in government programs initiated by the government, or transfers to the provinces. This is for the provinces to initiate programs. Well, as we slowly move over, you'll see the gray area that the federal government started getting more involved into social programs. And social programs are more where the government is transferring money, it's collecting taxes and then transferring money to other individuals under various programs, old age security, welfare, education, etc. And the other interesting thing is to look at the little line there. And this is the public debt charges. So this would be the interest that's paid on the debt. And you can see it goes up and down. And then it starts to increase. And when you get into 1990, 2000, you're starting to see that about a third, and we'll look over at this chart here, about a third of the expenditures incurred by the federal government are for debt charges, and about a third are in relation to social programs, which is redistribution of the revenue that's brought in by the government and redistributing it through these various programs. And only about a third are actually spent on government programs or transfers to the provincial bodies. So the whole point of that is to look at the history and recognize that deficit financing occurs, that governments will go into a deficit in order to finance major events like World War II, World War I. When there's a depression, it is upon the federal government to try to stimulate the economy by spending more. So then, let's walk into 2019 election platform. Do we need to continue deficit financing? Is there a major event right now that requires the federal government to continue to spend more in expenditures than the revenue it's bringing in? Now, if we look at the parties, so here are the four major parties. This dotted line represents the Liberals, the deficits that they projected to run in the 2019 budget over the next 4 years. The red solid line is the revised deficit that the Liberals are planning to run based on their 2019 election platform. And so they've increased the deficits. If we move to the NDP have a larger deficit in the first year, and then they're going to have a lower deficit than the Liberals in the following year, and then they're going to be a little bit static over the next couple of years, just decreasing it slightly. If we look at the Green Party is going to run a really large deficit in the first year and dramatically reduce that deficit over the next 2 years, and then run very close to break even in the last 2 years. If we look at the Conservative Party, the Conservatives are trying to run a smaller deficit in the first year, and they're going to slowly decrease that deficit as it gets closer to break even over the 4-year period. So deficit financing has proven necessary throughout Canada's history, allowing the government to deal with significant historical events. But the financial crisis of the 90s should teach us a lesson that deficit financing cannot go on indefinitely. So back to 1965 to 1995, we had increased spending, rising interest costs, and as you could see when we're getting into the 1990s, that about a third of the expenditures for the federal government were just interest alone. And then when you have high increasing inflation, those are the three factors that were happening between 1965 and 1995 that resulted in the crisis of the mid-90s, where finally the federal government, the party at the time, which was the Liberals at the time under Jean Chrétien, at that point in time, they made bringing the debt down and reducing the deficit was their main platform. Well, if we look at today, we don't exactly have significant rising interest costs, but the interest has been rising slightly. But one of the things that we do have today that we didn't have back then is we have an aging population. And so if we look at our tax base, which is simply tax rates times the base would be the individuals. If we have a decrease in individuals in our labor force, then there's a high probability that we're going to have a decrease to our tax base over the years, which means in order to keep running deficits, which we will have to pay off into the future, that means we will have to raise income taxes in order to accommodate the fact that our labor force is going to be shrinking. And the last and very important aspect to really focus on is if we're ignoring the risks that we're going to repeat the financial crisis of the 1990s, well, that is a big problem. So when we're sitting back today and we look at increased spending, which there's been a lot of increased spending, the rising interest costs, and they have been rising slightly, an aging population, so less individuals in the workforce over the next number of decades, and ignoring the risks of all of these things happening, we are repeating history where if we go back into the 1960s and everything looked great and it was great economic boom and the governments are spending all their money on great social programs and everybody was happy, well, and then 30 years later, we hit a financial crisis because it kept getting worse and worse. We're at the beginning of that today. We're at the very beginning of that road, and everything doesn't seem too bad right now. But if we were to fast forward 20 or 30 years and look back, would we look back and say, we should have seen the signs? So if we quickly look at this is Canada's federal debt clock. So as you see the clock change, this is the debt that goes up every second. As you can see from this debt clock, every hour our debt goes up by 2.2 million. Throughout the run of a day, our debt is increased by $54 million. So as you get ready to vote in the 2019 election for your party of choice, just remember, is running deficits indefinitely okay? The purpose of this presentation was to provide you historical information with regards to Canada's deficit financing since Confederation. I would also like to point out that the debt has increased by $720,000 since you started watching this presentation. Thank you very much.